Thanks so much for spending a small portion of your afternoon with us today. We've got a great guest speaker, Bob Niemi, with us today. And as always, or most of the time, we have Wes Beibers on these as well. We're going to continue the topic that we've been talking about for the last year, 2 years, as far as navigating this complex environment that we find ourselves in, where origination volume is not exactly where we want it to be, to say it nicely. And normally we're talking about underwriting and processing and fulfillment services and how to navigate that, how to navigate your operations to make it as efficient as you possibly can. Today, we're going to talk about compliance and maybe what happens when you look at your compliance department and try to cut costs there. As you'll find out, it may not be the best idea for you to do that, but I'm going to leave that to the experts to talk to you about. See if I can navigate here. So just a brief overview. I know a lot of y'all have been on here before, but for those of you that are new, a little brief overview on the Commonwealth Group. We have a wide array of services here. Fulfillment services, we offer processing, underwriting, QC, and condo project review through Condo Analytics. We have Encompass admins on staff as well for your LOS needs. And then lastly, we have a consulting department. That's really where we got our start. We develop policies and procedures. We're compliance experts. We develop QC plans, perform internal audits, so on and so forth, operational review and expert witness services. I hesitate to say this, but there's almost nothing that we can't help you with on the compliance side of the fence. So chances are, if you have a question, just shoot it over to us and we'll be able to point you in the right direction. Brief introduction on myself. My name is Martin Luplo. I'm the National Director of Sales for the Commonwealth Group. Been here for about 5 years or so and held various roles at the company, but most currently I handle new account development and existing account relations. And we also have with us today our first speaker for this webinar is Wes Beibers. He's our fearless leader over here at the Commonwealth Group. He is a 38-year veteran of the mortgage industry. Among some of his accolades, he's a DE underwriter, VA underwriter. He's a guru, everything conventional underwriting compliance. He also holds the CMB designation. And if I didn't mention it, he's a compliance expert, most certainly. And then, as I mentioned, we also have Bob Niemi on the call with us. He is Director of Government Affairs with Weiner Brodsky Kiter. Bob, you probably recognize him if you attend any state or local MBA events. He's a familiar face there, as he's always speaking at those events. In addition to that, his day-to-day, he's the vice chair of the CMB Society, secretary of MBA Florida. He is an ex-regulator himself, so he'll come with a very unique perspective to a lot of these issues that we'll be talking about today. And a little fun fact, he was D2 college football ref. So as you're playing Monday morning quarterback this upcoming football season, I'm sure if you have some questions in regards to some calls that were made over the weekend, he may answer those for you too. So without further ado, give you Wes Beibers and Bob Niemi. And gentlemen, you guys go ahead and take it away.
Thank you, Martin. And Wes, I do want to thank you for the opportunity to do this. This discussion comes about from several times meeting with Wes at different events and just saying we see this issue going on. How can we try to share a message about it? How could we put these things together? We've each brainstormed back and forth, and happy to say that I've gotten to know Wes pretty well over the years from our activity within the CMB Society. As vice chair of the CMB Society for MBA, I think I'm contractually obligated to always mention that that's what I do. And if anybody has a question about what it takes to become a CMB, or if you want to join the society or pursue that designation, please reach out to Wes or I. But today's discussion, Wes, things we were talking about, and people's strive to stay in business and right size their cost structure. The opportunity to cut compliance many times looks like a great savings. But just, what we want to talk about is some of that, the risk review that's required based on today's market, the strategies and possible solutions for you out there, as well as address some questions. Some of the things that I think about when I do this is that we're obviously looking at new strategies, new business models, the challenges those can provide, because if you're not sure how things are really working, hope is never a strategy. And you've got to learn from the regulatory environment that's out around you to make sure that you're utilizing what resources you do have, internal or external, to make sure that you're meeting your needs, you're still being compliant and able to stay in business, and you're not going to walk yourself into an enforcement action. Wes, did you have any comments or from our discussion?
No, I just wanted to also add just a little bit to this. First of all, again, we're glad Bob is here today. I've known Bob, well, frankly, more years than I care to count. So Bob's been around the business, so he really knows what he's talking about. And again, he is kind of the guru as far as anything CMB related. Just to kind of echo Bob's comments, what we're looking at here today is not just the compliance risk, but the risk of cutting your compliance kind of thing. And we often talk about in these rather lean times in the industry, where can we do some cost cutting and that sort of thing. And for whatever reason, two areas in particular seem to always come up, and that's quality control and compliance, because they are non-revenue producing areas. Well, we're going to be covering compliance primarily today, but I submit to everybody on this call, that's something you don't want to cut, because even though it is not a revenue production, it can kill your company and kill it very quickly. So we're going to be talking about a lot of that, some of the risks that you face, and how to properly manage compliance at this time. One thing I will throw in real quickly as we get going on our call today, if you have any questions, we do have a chat button on this. I know that Martin and I believe Valerie is going to be monitoring this. So they're going to be watching this. And then at the end, that we're going to be talking about any questions that come up at that time, because we do have quite a few slides to get through. So we're not ignoring questions, but we will be taking them at the end. But if you have any in the meantime, go ahead, or if there's something you want to ask, go ahead and put it into the chat. So if we'll go ahead and advance the slide to the next one, Martin, that'll be great.
So this is a slide I put in, and certainly the MBA, and the link there is there if you get the live copy of the slide afterwards. The Mortgage Bankers Association reported in May that IMBs and their subsidiaries, mortgage subsidiaries of charter banks, are operating on pre-tax net losses so far through the first quarter of 2024. And you can kind of see the bar graph there that's showing you the percentage of net pre-tax net income, and just where the people that are making above zero having positive numbers. And then you look at it with the yellow line or gold line there, those are the entities that do not have servicing. So certainly servicing is providing some revenue generation, but it's just the reality of the market that consolidations, cutbacks, and companies closing down. How does a compliance office, how does a management of a mortgage company, how do you meet the challenges while still, keep the challenges to keep your door open while also to remain compliant? West, if you have nothing else, we can move to the next one.
No, we'll go. No, that's great. We'll go into the next. Today, we're going to talk a little bit about some of the effects of cost cutting. And I will mention one chat that just came through here from Jennifer, who just said QC and compliance is best described as revenue protection. And that is right on that. That's what we're talking about today. I sometimes laughingly say that underwriting can hurt you one loan at a time. Bad compliance can kill your company all in one pop, kind of thing. So, but cost cutting and compliance, cost management is reality. It is. Everybody's dealing with it. We deal with it. We all do. And, we're not where we were several years ago. Volume has dropped off. So we've had a lot of this going on, and cost management and containment is key. However, because we've had this environment of cost cutting and cost management, it makes compliance more, it makes it more challenging. We've got fewer resources. We're going to take a look at some business models, some marketing and search for businesses, and that sort of thing. All of these things are, when business is great, the challenge for compliance is just keeping up. The challenge when business is down is maintaining your cost structure. But again, like Jennifer just commented on our chat just a moment ago, it's revenue protection. That's great. I got to add that to my arsenal, Jennifer. I'm going to steal that, just so you know. So if you hear it again, you'll know I'm appreciative. But again, CMSs and compliance management systems, we're going to talk a little bit about that, the need to adapt those, and they're going to continue to evolve. If anybody is aware, we have a very active CFPB, OCC, FRB, FDIC structure right now. I will tell you from our standpoint, we are seeing a lot of enforcement actions and a lot of interrogatories going on, kind of thing. So that this is all very important. And again, when we talk about a compliance management system, it always kind of cracks me up a little bit. We'll walk into some offices on an internal, and we'll say, can we see your compliance management system? And they'll point to the computer. And I'm like, okay, you may be keeping it there, but that's not what a CMS is. It's all your policies, procedures, your internal audit plans, all of those things. So again, a functional CMS is critical. Even I would say it's even more critical now than when business was going strong. So we'll move on to the next slide here. And I'll let you take this one again, Bob.
Sure. So some of the new business realities that we have out there, obviously, as the refinance market has dropped off, the origination team, staff, all the way through the management, they're looking for new ways to do it. We're working, new models for social media. How are you monitoring? Are you making sure that those people are remaining compliant? Teams. More and more often, and this is certainly a strategy that's been out there with the coaching world, the people that are working with your MLOs, to operate as, the Niemi team within the Commonwealth Mortgage Group, something like that. And, people start to get to the point where in some states, they may need to be, have a separate state registration. Are they operating in a manner where they might need to be registered as a DBA? How are you looking at that? Are they utilizing a CRM that's internal of your system? Or are they pulling consumer data, non-public information to another system that could be outside? Things that you need to be aware of. Compensation. We know people pay differently based on business source. We know people have pricing concession policies to try to be competitive and meet. How are you monitoring those? How are you monitoring the business channel part of this? Is it self-generated? Is it company-generated lead? Is it, refinance of an existing consumer? How is that actually being out there? And business models. This is a new one. As Wes mentioned, I speak a lot at different conferences. The new business models in 1099 versus W-2, hiring, consumer direct people, hiring realtors to work as your mortgage staff. How do you monitor them? Other service providers. Those are all very current topics that are out there. But doing it appropriately, you have to have awareness, understanding, and make sure that you're updating your systems and your policies and your oversight to account for all of those. West, any comments or questions on those?
I think that was very well put. One thing I will just kind of touch on just as a quick commentary is social media. And one of the things that we do when we carry out internal audit, and by the way, everybody should be doing that. But one of the things when we're brought in to carry out an audit, we talk about social media. First thing we ask for is we want to see a copy of your social media policy. What are your policies for that? And a striking number of people say, we don't allow it. And I'm always going, all right, I get $5 for every loan officer I can find on Facebook in the next 10 minutes. And, usually be enough to pay for a nice meal. I never get the money. But if you think your loan officers are not on social media, they are. They are all there. They've been told it's the thing, and they are out there and on it. You better have some policies that govern it, and you better be checking it, kind of thing. So of all of that group, I would say that's probably one of the more important ones right now, and always evolving. I mean, social media is moving so fast right now.
And two quick points on that. One, it's the lowest hanging fruit for a state examiner to find because your team is all over there. It's all over there, making sure, and the rules don't change when they go to social media. So you have to make sure it's advertising. Are you tracking it? Is it out there? If it's not part of your record for some states, you've already got a compliance problem. You're already got an enforcement action. So
that's all right. And I totally agree. All right, Bob,
So
I'll let you continue. You're doing
yeah,
great.
this is my, and I'm not sure if my graphic works the best here, but obviously we see a computer image of a home on the top, and then you see the different components and just how the foundations at the bottom, by the framing, by the second story, by the roof, kind of simulating how a CMS pulls together as within a house. Building a home, it's the wise builder that builds on a firm foundation, has proper training up there, are your policies up to date? Do they currently reflect, who is there, what the team is doing, and what the business program, the business plan is, what strategies you have? Are you aligning it to your marketing things that we just said? Social media, and Western, you mentioned this in my prep. I didn't think of it, but I was at a state mortgage banker event, and one of the training was, gaining business through social media. And one of the people in the front was talking about how he's always on this source, and he's always doing videos on Reels, and he's doing it on Instagram, and he's doing it on TikTok. And it was like somebody asked a question, how does this work with your compliance department? What's your review of that? And his response was, I don't even know what our policy is on it. I don't try to comply. I'm trying to find business. And it was just like the alarms went off in my head and the hair on the back of my neck going, seriously, you said this in front of a group? But so obviously making sure you're aware of what your people are doing and that you're doing the things you can do to keep them informed of your policy, what's permissible, both with inside your policy as well as by law, state and federal laws, and then what triggers they might hit because of what they want to say on a social media post. Are you monitoring it to do it? Can you handle it internally? Are you utilizing an outside source? Believe me, Wes and I both know of companies that are out there that can do that for you and automate that process to make it out there and make it more compliant out there. Do you have a consumer complaint process? Are you truly monitoring these? I've done due diligence on companies and walked in and say, how many complaints did you have? And they'll do, tens of thousands of loans, and they'll say I had 5 complaints last year. And I'm like, no, those are just the ones you track, because I guarantee you somebody was upset because somebody didn't call back. Somebody was upset because they didn't get the rate they wanted. Somebody, got their numbers too late or had a challenge along the system. You need to track them all. You can't just track the ones that somebody decides they want to complain on your portal, on your website. They all have to report all the way up through the system. And then how you take that CMS and you're reviewing it, reporting on your progress, correcting where you need to, updating your system, and retraining because you're doing a new business model. You have a new LOS, you have a new marketing program that you're allowed to do it. And then what's the most critical, and I know Wes talks about this all the time, management, oversight, and engagement. Critical portion of compliance and critical portion of any review a state regulator or a federal regulator is going to do when they come to visit your office.
One thing I'll throw in on the management oversight, for those of you who are Fannie Mae seller servicers, something like that, if you've ever been through a MORA audit for Fannie Mae, or you've ever been through a core audit with Freddie Mac, we've sat in on those with people, kind of held people's hands through it, so to speak. But the first thing they look at is governance. That is the first thing they look at, is how much control do you have on your operation? And that's coming from Fannie and Freddie. And you can imagine what it's like coming from your regulator. And regardless of your source of regulation, whether it's at the state, CFPB, FDIC, FRB, OCC, whoever it happens to be, on that, management oversight is very critical on that.
100% agree. And I know, and I always say it's listed, if you list the pillars or whatever, it's listed last, but it's the most important.
Mm-hmm. One last thing I'll just say about this, and this will actually come up on another slide. We'll talk about a commitment to compliance. In other words, we're going to talk about a culture of compliance within a company. For those of you who are president, CEOs, senior managers, whatever, it has to come from you. If you don't have a culture of compliance starting at the very top, it's going to be a problem. So for those of you who are in senior management roles on this call today, I would encourage you, if you have not adopted that, do it today. If you walk out with nothing else, do it today. And for those of you who may be in compliance roles, if your senior management is not, following compliance, if you know that, you got probably the worst job in the mortgage industry, because if they don't have it, you'll never get it, kind of thing. It starts at the top. So we'll kind of move on here, Martin. All right, this is a little slide that we put in. It's kind of a fun one here to kind of break it up a little bit. This is something I actually ran across several years ago, and I would love to cite the source. I can't, so if I'm stepping on anybody's original research that's on this call, I apologize. But ran across this. Look at this paragraph in this block. I think we all know what this says. I'm not going to read it out loud. I'll let everybody just kind of read it silently. I'll bet you understand what it's saying. It really is true. So what's important here is the way that you do compliance. It's the whole picture. It's not just the individual components. It's the whole picture on that. Now, one other thing I'll mention on here, when we talk about compliance and a culture of compliance, and I always say this: number one, you don't want your regulator to be the first one to find the error. That is never a good start on that. You want to make sure that you're engaged with it every day. Now, it doesn't mean that you don't make mistakes, because everybody does. But what a lot of regulators are looking for is that idea that you're engaged with it, that you are working on it, and that you're engaged with it. Matter of fact, there was a item released earlier this year, and I wish I could attribute it. I believe it was the CFPB who put it out, that said, if you are engaged in internal audit and you find an error, and it's not part of their audit, as far as they're not there finding it, you found it. But if you find it, become aware of it, mitigate the risk, retest. If they come along later and they see the errors in older files, but they see what you've done, they're not going to hold that against you. They want you to be involved in your own internal auditing. If you're not involved in that right now, start today. Start today. Make out your plan and start today.
Right. Before you switch, I want to make a comment, because this is one of the slides that I pulled from one of the other things I've seen West and Commonwealth do. Pulled it out because, if you write something yourself and you miss a word, when you come back and you read it again, your mind just puts the word in there. You don't see it. This shows us when you have something and it's got errors and it's got mistakes and you haven't corrected them, that it either could have been hastily done, not reviewed, as he said. You should be training somebody on these things, so other people should have perspective and look at that. They should be suggesting the edits and updates. And we know new LOSs come around, business models, advertising, all of this happens, and that's part of the evolution. So believe me, we've all found them. We all make some errors, but when it gets to an examiner, they need to be pretty much on point to what you're doing and on point to being correct.
Absolutely. Absolutely. All right, well, we'll move on to the next one here. I'm going to let Bob kind of cover this again. This is something he contributed today, and I'm going to let him kind of run down these.
Yeah, and I always say, and honestly, I'm on the board for MBA of Florida, and I did a regulatory environment one, and I bring up what are real life regulatory examples? What are the insights you can have from where you sit to find these things out? CFPB supervisory highlights come out all the time. They have special ones and they're out there. So I pulled a couple of these just from things that you need to be aware of, because number one, you do need to be aware of the issue. You need to read what's actually in that finding. You can find them online, go through and find out, what are the challenges. So we see a loan officer compensation one, special on that, and challenge. Whoop, we bounced one. Martin, we got to go back.
Oh, there we go.
Sorry about that.
Uh-oh.
We're getting a little finicky over here.
So difference that, can you pay different based on product type? Gee, that seems like that one's been answered before. Then you see one from the fall of 2022. Can we pay originators differently to cover cost increases? It's out there. Adjustable rate mortgage disclosures, are they matching the terms? They had a change in a program and they didn't update the systems to match what they were actually doing. And then back in spring of 2022, compensating loan officers differently on loan. Wait, that's the first one. It's still happening. And believe me, I've rewritten comp plans for people in the Midwest at a Midwest community bank. They were paying different for jumbo than they were for conventional lending. And I'm like, do you not catch that this is out there? You got to have awareness of these items. And I know it's on a no-name basis. You don't know who it is, but it helps you understand what the CFPB is thinking about, what their position is on the practice that they see in the marketplace. And it's not 100% perfect because you don't always know exactly what their business practices were, if it was a marketing issue or something, but it's risk identification. Do we have these challenges in our systems? Somebody in your team, if it's a small compliance program and you have one, that compliance managers needs to be reviewing them and updating management about it. Talking to the sales managers. Is the leadership willing to take the risk if you are on the riskier side of this? Or can you mitigate with some policy efforts? Can you train so people understand better of where the guardrails are that they're allowed to be in? What reminders can you give them on a monthly or whatever moving forward basis? But it's just funny when you look at these, documentation, failed. We got the spring of 22. We also had disclosure failed to reflect terms of the legal obligation. Again, they had a change in the product or the term and they didn't update the disclosures they were giving. Somewhere in there, there's a disconnect. And why is somebody not catching that and reviewing it before it gets to the CFPB? And then we go back to the summer of 2021, the bottom one there. Compensating loan originators differently on product type. That means that they've done reviews and in their exams, in their CIDs, their non-public enforcement actions, they have these matters and you should be identifying them and finding them out what's going on to have out there. And then examinations. I know Wes has got some examples of this too from other entities, not just the CFPB. But I know clients, we've been involved in them where they're doing active reviews of what the pricing concessions are, what the policy is, how it's being done, who has the authority, what's the impact on your consumer base against protected classes, how are you competing by lead source, are you meeting fair lending? If you're not aware, CFPB under the Biden administration changed the supervision and enforcement group to supervision, enforcement, and fair lending. If you don't think they're looking at the impact of your policies on fair lending across the board, catch up, understand. You may not be the biggest company, but if you have something that gets a headline right now or would work in one of the director's tweets, they'll lovingly put you up on the block. Wes, do you have comments or?
No, that I think, and I think what's important, and just in case anybody missed the point, if you notice this, these things are repetitive. We've got originator compensation based on different product type. We've got it in 21, we've got it in 22, we've got it in 23. It means it's still a problem. And I'll just throw in very quickly, we answer a lot of just general compliance questions through the day, and we're still getting a lot of questions regarding TRID. Is this a change of circumstance? Yes or no? Can I charge for this because of this change of circumstance? It's really kind of surprising that here we are, however many years it's been since TRID went mandatory, but we're still getting questions over something that's been around for several years. So it's still out there. All right, we'll move on to this next one here. This is just kind of some stuff that we've seen, and Bob and I have talked about this at length. And I'm not going to read all the specifics on this, but the first example that we've got here is regarding pricing concessions. And by the way, if you have not been through a pricing audit from your regulator, don't worry. Guarantee it. They are coming. And it doesn't matter who your regulator is, whether it's, we've seen this coming from CFPB, we've seen it from FRB, FDIC, and we're working on one right now that's coming out of the OCC. So all of the agencies have gotten the message and they're very familiar with this. And one of the things that has come about with this is they're taking a look at how many loans are getting price concessions. Now, the law allows for price concessions. The regulations allow for that because when all these things came out, they realized that there are going to be pricing competitions and you may have to match somebody down the street and that sort of thing to get the loan. And then they're aware of that. So they're not illegal per se. However, they are taking a look at these because they're finding a lot of these going on, and they are finding situations where it is tied in some cases where intentionally or not, there's a difference between protected class and non-protected class borrowers as to the amount of pricing concession that's being given. I will mention here that just real quick, and I'm kind of stepping on some other stuff time-wise. I can't stress this one enough. We sat through a meeting earlier this year on this topic with the regulators, and the question was, how many do you expect? What number is too many? And the answer, it drew gasps from the room. They said no more than 3%. So they said based on numeric unit numbers, no more than 3%. So if you do 1,000 loans in a year, what is that? 30 that should have price concessions? That's not what they're finding. Now, they will also tell you they're aware of the problem. They're not killing anybody yet, but it's coming. So one of the things we're telling people, you need to be auditing this now if you're not already on that. Anything over 10 to 15%, you're going to have not just a visit from the regulator, you're probably going to face some other scrutiny and potentially some civil money penalty, because they're, especially if it involves different demographic groups that you're treating differently. They believe that, whether rightly or wrongly, the feds believe that this is a matter of pricing discrimination that's taking place in the industry. By the way, I will mention just one group we were doing an audit for. Now, this one was last year. The question came up, you've got this difference in demographic, and why did you do it for this group but not the other? And they said, well, the first group asked for it and the second group didn't. And I was like, well, that's not a real good answer. So that's not a real good response. So this is something you need to look at. By the way, this is coming. If you haven't had it yet, don't worry, they're going to get to you. They're going to take a look at this. Another thing they're looking at very closely right now is dispositions. Now, we're all familiar with HMDA and loan application register. One of the things they're looking at is they are looking at how you're treating your adverse files, not just in the credit decision that you made, but in how you treated that borrower during the process. In other words, for example, do you know the difference between a withdrawn file and a file closed for incompleteness? A file closed for incompleteness is not a denial. Do you not send a denial letter on it? You didn't deny that credit. You closed that application. The other thing that comes out is, what is the length of time that you allow for closing for incompleteness? It should be written in your policy manual. We give our borrowers 90 days, 120 days. You can decide the length of time. You've got to give everybody an equal amount of time. We've had some where we were called in on a review. They had some borrowers, they were closing for incompleteness at 10 days. And some of them were upwards of 180 days. That's a recipe for disaster. Whatever your policy is, you've got to follow it. You've got to be consistent. If your policy is 90 days, it's at 90 days. And I don't care how much the loan officer whines, and I know we have production people on the call today, but folks, once it hits that time frame, you're going to disposition it. And you can say, but they're still looking. Doesn't matter. It's a compliance related issue. You have to treat everybody the same, give everybody equal opportunity. Finally, Reg B, this is one of these things that, for those of you in the banking world, I know you're very familiar with Regulation B. For some reason, they skipped that lesson for the IMBs and the brokers. I'm not sure why. Regulation B applies to everybody, and it's two parts. One is equal credit, treat everybody the same. But the second part of that is you are supposed to render a credit decision or send a notice of incompleteness within 30 days of the credit inquiry. Now, obviously, if you pull somebody's credit and they've got a 450 credit score, chances are pretty good that's not somebody who's going to get a loan. You need to send them a denial letter as soon as humanly possible. The second part of that, though, is let's say somebody comes in for a pre-qual or a pre-approval, whatever. They've got an 800 score. Maybe they've given you income, but they don't have a property. Sound familiar? We're searching for a property. You haven't triggered the loan yet, but it's still a Regulation B credit inquiry. You've got to give them a status within 30 days. I can tell you that for some reason that gets skipped over in IMB land. I'm not sure why. Banks are very aware of it, but we've had some IMBs that we've had to assist with some audits from their regulators where they haven't been doing this, and it's a thing, and you need to be aware of that. So just because you don't have a triggered application with the 6 items doesn't mean that you're out of the regulatory swamp. You're still in it. And I always say this, if you pull a credit report, you could potentially make a credit decision, and that is what Reg B is based off of. If you've got a bad credit score, you can render a credit decision. If you've got a great credit score, you may not have enough information to render a credit decision because you may not have a house picked out or anything like that. Doesn't matter. You still got to deliver the Reg B disclosures to the borrower. So we'll move on to the next one here. And
So-
this is go ahead, Bob. I'm gonna let you do
I was
that.
gonna say, this is one that I pulled from some stuff that I'd seen Commonwealth do in the past and pulled this over. Do you have paper or do you have a process? Again, you point at the computer, you point at pieces of paper. Is it something that's alive and functioning? In diligence, when one company was going to look at another, pretty large couple ones, where I came in and they asked a review, and I always do the highline review of some compliance policies, and I'm like, when did Wes Beibers leave your company? Because it says he's still here, but it looks like he's over there now. Oh, he left 2 years ago, but it still says he's the responsible manager. It says it's supposed to be updated on these. That's easy to look at and say, is this truly a functioning thing? Has training been updated? You kind of look through there, you look through the wheel. It circles around because it never ends, because by the time you update policy and procedure, then you've got a review on the new policy and procedure. You got to train on the new policy and procedure. You've got to do independent testing and get some perspective, either from internal to your company or external from somebody like me or from West. Are you looking at, how this evolves through? Are you keeping track? I put this down in my notes. Are you keeping track of all the marketing out there, or are you just crossing your fingers? Or in the Northeast, as they say, are you whistling past the graveyard, hoping nothing happens to you? Are you training based on your exam findings? Past exam findings, and notes that regulators have pointed out to you, that's the starting point. If you don't understand, they're going to come there again and move forward. You've got to have that updated in your policies. You've got to train to correct so you don't have a repeat finding. Are you finding what is the root cause? It's one of the things that's in this wheel. It's a great point. Do you correct something because somebody at the top thinks that's the issue, or it's really an issue because your system's not doing it and your people have found 5 ways to correct for the system to make it happen out there? Are you truly reporting, educating, and implementing the things that are going to keep you in business and allow you to survive this downtime?
I don't have anything to add to that. That's very well put. It's compliance is all the time. It's forever kind of thing. It never goes away.
Right. And I see this wheel and I think of the CFPB's exam manual, and you look at their box, how they go through the exam cycle. They now, in their exam cycle, they don't have an instance where the person they exam doesn't have findings, doesn't have fault, doesn't have liability. So this is the one, you need the wheel to correct the square. You've got to make them work together. If you're not working your side of it, you're just setting yourself up for disaster.
Absolutely. All right, we'll move. Martin, if you'll move us here. I have to do this one because, Bob, this one's me. I'm sorry. This is one of my favorite slides. This is what I call my cautionary tale. We were called into, actually, this was not part of an audit, but we were called in to review a QC plan. And we asked for a copy of the document, so forth. They sent it to us. This is what they gave to us. The first paragraph. This quality control plan dated March 2nd, 2015 for insert name of company here. Holy cats. I mean, we got a problem already. This is not a plan developed for that company. It's not one they're probably following, and it certainly isn't accurate. And when we did this, when I said, what's the name of your company? And they'll remain nameless. But I said, is it insert name of company here? And their response was, well, no, of course not. And I said, well, according to your QC plan, that's the name of your organization. So folks, my whole point on this is look at what you have, be careful with templates. We get a lot of questions sometimes like, can you get us a template? I'm like, no, it's got to be for you. It's got to be for you on that. So be very careful with templates. But this is my favorite cautionary tale. That is actually a true story. And beyond the fact that it was this was a few years ago, but it was out of date even when they gave it to us. So by the way, QC plans, just as an aside, are supposed to be updated yearly or reviewed yearly on that minimum on that. So all right,
It should at least show the review date. And
right.
West, what is worse than having no policy?
Oh, another one of my favorites. The only thing worse than no policy is having a policy and not following it. That is by far worse, because from a regulatory standpoint, and Bob's a former regulator, he knows this. You come in and you say, we're doing whatever it is. Well, I'll just use it. We had somebody not too long ago who said, we're performing a pricing regression analysis every 3 months, every quarter. And our response to that was, that's incredible. Can we see the last one? It should have been in March. Well, we didn't do it. We didn't do it that time. Well, okay, can we see the one before that? Well, we didn't do it then either. Well, your policy manual says that you do this quarterly. Well, if I'm a regulator, my next question is, what else are you not doing that your policy says you are? Your policy says you're doing all these things. So again, another reason to avoid templates. You don't want to get locked into something that you don't really do. And again, the only thing worse than not having a policy is having a policy and not following it, by far. That's the worst thing I can think of. So we'll go on to the next one here. Bob, I'll let you kind of run this one here just real fast. So
well, this is another one of yours, but it just highlights just some of what is the downsides of not following your CMS. What could be, depending on state or federal law, what you're doing. I mean, if you're not properly following policies, if you're not properly licensed, if you're doing something, these are all the different remedies available to your regulators. They could ask you to return money, restitution, disgorgement of profits. I've seen this happen more than once or twice when somebody starts lending before everything's properly, approved, or they have an originator that's, possibly not licensed in different states. We know you can do civil money penalties, you can pay damages, and and depending on state law, in addition, it can add up. Just not having the right state forms. South Carolina is famous for just racking up, $100,000. Washington State, tens of thousands, hundreds of $1,000s of fines against companies that market in ways that don't meet the strict code within the state of Washington. Things to be aware of and just understand. It matters. These end up to be real dollars, and every enforcement action goes on to your NMLS consumer page. You're going to have to, every time you do an attestation, say yes and then answer the questions. It becomes a pain. On top of the fact, it becomes real money.
I don't really have anything to add to that other than just at the very bottom, the numbers, they can get staggering. They really can. So, all right, we'll move on to the next one here. This is kind of a combination of Bob and I. These are things that we've been engaged with or aware of. These are just some recent enforcement actions. Look at the dates. We're within a year of these. Bank of America had a huge enforcement action. Now, Bank of America is a huge company. Granted, I don't care. Nobody wants to write a $12 million check. Nobody wants to do that. So this was in regards to HMDA, which, by the way, if you are not familiar with HMDA requirements, I would strongly suggest you find out now. That's incredibly important.
Yeah, and I can give some color to these because these are ones that I pulled out because I saw just some of the practices and shows just maybe the compliance was not where it needed to be. So the Bank of America one, their distributed marketing team has 75% of their applications are over the phone, and they have a script to read. about HMDA and asking for questions about race and sex to comply with the HMDA laws. They had found that, 13% of the borrowers, and this is all as stated in the consent agreement, 13% of the borrowers had chose not to do that. They compared to their peers and found out the numbers were high. So they said, we need to put monitoring in place. Let's do it. They put monitoring and training in place, and the numbers dropped to half. And it's like, that's great. But some originators didn't actually drop the way others did. And then they dropped monitoring. Guess what happened? The numbers went back up, jumped to 17% in 2020. They had 113 individual originators that 100% not provided. Race and sex was not provided by choice of the borrower. Obviously, that's a challenge. Reviews showed that the MLO stopped asking. The monitoring showed again. They started doing it, and it just showed that they had the challenges not correcting it. So in those time frames, yes, you tried to do it, but you discontinued. It got worse, and then you didn't correct. And you should have known there were people on your team that were not accurately following your policy or your process. The Freedom one, and again, I'm not trying to pick on teams. I'm just picking out what's a public consent policy that's pulled out there, that they had deficiencies in their policies and systems to collect the data. And this was a repeat violation. So it was on top of a 2019 consent order that they had not made the adequate changes. And if you go in and read not just the $3.95 million, the amount of new policy, new monitor, new programs that CFPB dictated for them as part of this process, it is staggering.
Yeah, and I'll just say again, both of these happen to be related to HMDA. And again, if you're engaged in this lending business, and I have people say, well, we're too small for HMDA. Did you? No, no. If you did basically any mortgage lending in an MSA, I would say you're probably done more than 25 in the course of a year. Anybody on this call, you are subject to HMDA on that. Even if you didn't necessarily render the credit decision, if you are having somebody else render the credit decision, they may be reporting HMDA. What if you turned down a loan before it hit a lender just because the appraisal came in bad? You rendered the credit decision. You have to report it. You're still subject to adverse action. So if you have any questions on HMDA related issues or scheduling a HMDA audit, get with Martin on that, because I will tell you, now is the time. We're setting up HMDA audits right now for 2024, because man, January 1st, you got 60 days, basically, get it done. All right, we'll move on to the next one here.
So yeah, this is one that I put in just to highlight. Obviously, I'm going to let Wes talk in a second about outsourcing, either a specialist by company, that's out there so that they can, exponentially help what your review site is and do something. Let the people who are experts at this do that to see if you've got a smaller team than you had out there. Certainly new training, new methods of training. What can you do to actually put some of the things together? And then there is no substitute for oversight. West and I are 100% on this piece, but go ahead, West.
Well, I'll just throw in here, and I'm going to make a quick sales pitch here. We are a third-party provider for outsourcing. So if you are in need of any of those things, internal reviews, quality, any of those things, we're a resource for that. But even if you're doing it internally, you need to think about what is it costing versus outsourcing. Implementing new training, rules are always changing. Make sure your people are trained. Look, your loan officers as a group, and I'm kind of picking on the LOs today, I guess a little, they aren't keeping up with all the various compliance changes. That's not their job. Their job is to generate business. If you're working in a compliance related or a management area, you have to get them the resources and the training so they know what to do, kind of thing. That's all very important. And again, oversight, there is no substitute for it. You've got to have management oversight. And again, my favorite expression, a culture of compliance begins at the top. That's where it starts. If you're not ready for that, then there's not much we can do to help. If management doesn't care, the other folks won't care, but it has to start there. All right, we'll move on to the next here. And I think we're about to round this thing out. Yeah, we are. And Bob, I'm going to let you kind of go here and then we'll turn to any questions that may be out there.
Right. And and the reality is we certainly understand cost management is, you know, it's commonplace. We've been involved in transactions of what we do when we're doing licensing transactions for companies, when one's buying the other, one's cutting back, one's surrendering licenses in states where they're not no longer, you know, doing business. You need to have awareness of this to maintain a compliant company through the challenging market. Maybe it is outsourcing the compliance review. Maybe it is a company doing more of your QC for you. Maybe it is just getting more engaged with your state or your national MBA to utilize some of the training and software items that they have out there. Looking at company versus software systems. I know of companies, I see them doing their presentations. I've seen them work for clients, you know, for social media monitoring to check, you know, different documents and to be, you know, making sure that people are doing it the right way, be it social media, be it HMDA, be it LO Comp. Make sure you're aware of your numbers and you know what your people are doing before your regulator tells you what your people are doing. Compliance managers, they need review, they must adapt, they must evolve. You know, to survive this market is not only dependent in the dollars you bring in, but while you're bringing those dollars, bring them in with a functioning CMS. Make sure that your compliance management system is going to allow you to stay open past the end of the calendar year, past the quarter. You know, no, you can't just say good enough is good enough. If you're permitting people to break the rules, you're promoting it and it will spread. That's how, you know, I guarantee you it didn't just start with 113 people in that one and say, we're all not going to do this. They saw that 10 people were getting away with it. And the next time there's 25 and boom, if they're not going to check on it, why do I have to comply? It's up to you to make sure because, and I highlighted this when we put this in there, risk is real and it can come down to haunt you or break you. So please be aware.
I don't have anything I can add to that. That's a good summation of everything. And the biggest thing, folks, we're not here to scare you today. Maybe a little bit. We're here to scare you, but we're trying to stress the importance of this. Like Bob mentioned, his firm. I always say this: we're not our firm, Commonwealth Group. We're not attorneys. Bob's firm is attorneys, and you really
except
want
for me, I'm not an attorney.
Yeah, Bob's always very careful to point out he's not an attorney, but his firm is attorneys. And I will tell you that you really want to start out, whether with our firm or their firm, one or the other, handling some of these audits, looking at your compliance, part of your oversight, that sort of thing. And I will tell you from experience that generally what happens is we'll find something or we're doing regulatory response. And if it gets really bad, then that's where we bring in Wiener Brodsky Kiter. And I always say this: if we ever conduct an audit, say a regression analysis or that sort of thing, we're always very careful to say, do you have legal counsel before we disclose these results to you? You don't. Well, here's somebody you need to have on the phone call, or you need to have your legal counsel. And by the way, if Commonwealth has that conversation with you, you know there's a problem because we want to invoke attorney-client privilege kind of thing. So fortunately, the majority of them don't. But folks, it's all very real. Again, the statement a little earlier, it's revenue protection. Like I said, Jennifer, I'm totally stealing that. Just so you know, and no, I'm not going to pay you a royalty. But I'm stealing from you. Just so you, like, again, I'm admitting it. But the whole point of all of this, folks, is compliance is very real. You've got to be a part of it. You've got to be engaged with it. It starts at the top. Guys, we can give you horror stories all day long because we live them. We see them every day. And they're good people. Sometimes it's an honest mistake. Usually it is. There's a little bit sometimes I wonder about. But for the most part, it's just lack of oversight. So we'll go on to see if there's any questions out there. And we are at our time limit, but we do have a few minutes if there's any questions to open it up.
Yeah, great job, gentlemen. Bob, thanks so much for joining us today. That was very insightful. everybody. I think West and Bob are the best in the business when it comes to compliance and regulation items. So if you all have any questions, please drop them in the chat box. I don't see any right now, but I will be following up with the slideshow, and then we're also going to be editing this video and putting it on our YouTube channel. So I'll make sure everybody has a copy of that, so you can go back and reference this this webinar here if any of the items do come up here in the future, which I'm sure they will. But with that, I'll give another couple seconds here. If anybody has something, please drop it in there. We'll answer it right here on the call. Otherwise, drop us
If
an
not,
email.
I have one parting comment. Certainly, thank you very much to Commonwealth and the opportunity to do this with you both and the group. I greatly appreciate. And when people think of, how does Commonwealth, how does WBK overlap? They're more the doctor you go to see to make sure that your health is good every year. You're reviewing, you're doing it that year. Most of the times I get involved, our firm gets involved, is when you've fallen and broken your leg, you've got a disease, there's something challenged that, there's going to be enforcement actions and you need somebody to help you find a way out, survive an exam that's going wrong. Those are the issues. So we're in the same, area. We just operate with different parts, and we certainly utilize firms like Commonwealth and other, but we're happy to participate. And if this webinar helps somebody realize that, hey, I really need to look at what we're doing now to make sure we're up to date, and it saves you come your next exam cycle, this is 100% worth it for you. If there's anything we can do question wise, or if you are in such a case where you need our firm's assistance, certainly reach out. It's all always a free conversation to find out what we can do for you.
I'll just throw in, just to finish out while we're waiting for any other potential questions. Bob, thank you. Your assistance is always great. And like I said, Bob, if you go to any conference around the country, I know I don't think I can go to a conference anywhere without Bob being there. So I'm sure you'll see him around. Step up and say hi. Bob and his firm do an amazing job, and I think that's a great analogy. We're here for your general practitioner. When it gets really bad, we're going to send you on to the specialist, and that's WBK at that point. But again, Bob, thank you for your time and energy today. And if anybody has any questions, feel free to reach out to us. We don't have anything on the chat. Feel free to reach out to us through email. You can certainly send us questions. We'll be happy to answer them that way. And we'll kind of go from there. I don't know when our next webinar is going to be, sometime next month or early September, I believe. And I think it's going to be on underwriting updates, if I'm not mistaken. But like I said, I could be wrong. I don't even know what I'm having for dinner tonight. So, so don't ask me what the next webinar is going to be, because I don't know. So at any rate, all right, everyone, hope everybody enjoyed it. Have a great day. I think, Martin, if I'm not mistaken, you can get them a copy of this, and it'll also be up on YouTube as well. So
Absolutely.
Thanks, everyone. Have a great rest of your afternoon, and have a successful end of the month. So we'll talk to you, everybody, soon.
All right.
Take
Bye-bye.
care.